Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Kickstart video. Today's date is August 2nd, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, sterling versus US dollar from a tactical perspective. We also have some fundamental news with the US jobs report coming in weaker than expected, unemployment rate moving up to 4.3%, and the job growth, around only 110 or there, that thousand. They're expecting 177, so much weaker than expectations, and suddenly the Fed's beyond the curve. The good news is that U.S. Treasury yields are doing the Fed's job for them. We do have the U.S. two-year yield down 22 basis points. Currently, the 10-year is down minus 12.6 basis points. Stocks, of course, getting hit with the NASDAQ index down minus 417 points. The Dow Industrial Average is down around 476 points as I speak. Let's get into the technicals. We'll start with the euro versus US dollar and the foreign exchange. That's what our focus is here. So let's get started. I'm looking at the euro versus US dollar on the hourly chart, and we were down here before the data, and we've since broken above all this cluster of moving averages. That's more bullish for this pair. We also moved above. I'm going to outline this level right here. This level comes in near the 1.08725, and you can see the importance of this from a resistance standpoint through here. Moved above it, used it as support through here, and then found other support right here before breaking to the downside right here, and we returned back to the area in trading last week, and in trading here today we were moving to the upside. 2, 3, 4, 5. I guess on Monday too we came up to that high. So extending above the 108.725 is more bullish for this. Even more bullish for this pair. Obviously, getting above the moving averages was more bullish as well. So the next target level that I see probably somewhere around this level at 108.94, just short of the 109 level. These days right through here as well. You can see where it was both support and resistance. The last gasp right here tested the not only that line but the 200 bar moving average on the 200-hour moving average before moving to the downside, and then we started to use this lower level as resistance before moving lower through here. So that is retracing what we took over the last 15 or so trading days to the downside, and that's the technicals in play right now for the euro versus US dollar. Take a look at the daily chart, just to give you an overview of what that looks like here in trading this weekend. We came down, tested the actually moved below the 100-day moving average. We did hold that level in trading Monday, I guess, but moved below the level yesterday and again today, but rotated back to the upside. So holding this level is key. On the top side, there is our high price here, and then we have this trend line cutting down here, which is, you see where we're going as far as the euro versus US dollar, with narrowing trading range and up and down markets as support down here, resistance up here at the trend line. We are above the 50% midpoint of this move down in 2023, which was that level comes in at 1.08618. So watch that level as a support level on the downside. At 618, let's take a look at the hourly chart again. The 618 is just below the 72 level through here. So 61 to 72 is probably support on the downside for the euro versus US dollar. Let's take a look at the dollar versus yen next, and really squinch this up a little bit here, because we are moving to new lows going back to this period right here, which is March. This area right through here between 145.89 and 146.51 becomes the next target on the downside. That level area, I should say, corresponds with different swing lows through here. We broke below that level, started to use that level as resistance through here, and then broke above it again and used it as a support through here. The last thing we did right here was find support against that old high, going back through this period right here, and also against the 200 bar moving average on the 4-hour chart at that time, and that led to this sharp move to the upside. That took the price from 146 all the way up to 161. Now over the last let's count the weeks, 1, 2, 3, 4, 5 weeks. We've seen a rotational back quickly to the downside here for this pair, looking down toward that 140, above and below 146 level as the next target support. On the top side, it's not until the 61.8% retracement at 148.53, and then above that 149 to 149.65 is a swing area from this period right through here, which we fell below in trading yesterday and continued to move to the downside after the break lower after the U.S. jobs report. So that big moves in the dollar versus yen, obviously. So be aware for a number of ticks or pips movements in that pair. With the price currently at 147.20, we're still about 70 pips away from the high of this swing area, and another 70 pips lower from that level, or 60 pips lower from that level to the low of the swing area. So you got to be ready for some pip movement in the dollar versus yen. Of course, the pip value is less than $10 as well, so that's an influence as well for that currency pair. Let's finally take a look at the sterling versus U.S. dollar. And again, we'll look at the 4-hour chart for this pair. And remember, the Bank of England did cut rates by 25 basis points yesterday. And we did see a move to the downside, taking the price back below the 200-bar moving average on the 4-hour chart. Now with the U.S. yields moving lower and the Fed, while the Treasury market doing the Fed's work for it lowering rates, we are seeing a rotation back to the upside and downward retest. We're testing the 200-bar moving average in the 4-hour chart right around the 128 level, currently trading at 128. Exactly. As I type this level, this area right through here, near the 38.2% retracement at 127.59 is now support for the sterling versus U.S. dollar. Get above the 200-bar moving average, and we start to look toward this swing area up through here. Recall from earlier this week, we did try to move above it on a number of different occasions through here, but each of those times the market failed. But 128.44 or 45 to 128.60 is the next target on the top side for the sterling versus U.S. dollar, if we're able to move away from the 200 bar moving average on the 4-hour chart. So big moves in some of the currency pairs, and certainly big moves in U.S. yields today. U.S. jobs much weaker than expected. By the way, the market now has about a 108 basis points cut by the year end. That is down another 20 plus basis points from prior to the release. There is also a 73% chance of a 50 basis point cut in September as the Fed catches up to the market. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.